The No Tax on Tip Act could change everything for service industry workers. It's bold, it's political, and it has people asking, should tips really be taxed at all? And why only 3 years? We're breaking down what the bill says, what's fact versus fiction, and what it means for your money. Welcome back to Full Throttle Finance, a financial literacy podcast geared towards taking complex financial topics and breaking them down into fun, relatable discussions. My name is Felicia, and I am your CEO at Claim Me Consulting. And I'm Alli, co-host and senior bookkeeper. Whether you're running a raise program or just getting your business off the ground, we're here to help you make small shifts that drive better and ninja performance. All right, last week we broke down how motorsport teams should handle payroll and why misclassifying your career could cost you big time. We also covered employee versus contractor status, insurance gaps, and why building a solid payroll system is more than just cutting checks. It's about protecting your people and your program. It's really good episodes, so go check it out if you haven't seen it. This week we're diving into the big beautiful bill, specifically the No Tax on Tip Act. We'll walk you through what the legislation actually says, who it impacts, and how it could change taxes for service workers across the country. Whether you're a gig worker or a business owner, wondering how this affects your payroll. The One Big Beautiful Bill Act is a massive piece of legislation that just passed and has become law now. Some of the impacts start this year in 2025 for the end of year tax season. And some of them start in 2026. Some of them will expire in a few years. Some of them are permanent. Some of the changes that are in these bills. It is very large. And quite honestly, I would prefer to call it the HR 1 bill because I think it's anything but beautiful. A lot of these were individual pieces of legislation that probably either should have stood or fallen on their own retrospectively, but we kind of skipped that entire process by just muddling everything into one all or nothing yay or nay. So with that being said, it passed, like I said, it's law. And so we're going to be breaking down a lot of the different sections of the bills that are going to impact everybody in their normal everyday lives when they go to file their taxes at the end of the year, what credits they can claim, and things like that. And there's a lot of it. So we're probably going to span some of these episodes over a couple of weeks, honestly, because we don't want to overload you, but we definitely want everybody to feel supported when it comes to knowing how all of these law changes are really going to impact themselves at the individual level, at the business level, for their employees, all the things, right? So like Alli mentioned, today we're going to talk about no tax on tips. So I think, Alli, just to get started, right, we should probably talk about what the core policy of the No Tax on Tips Act is, right? And so what it is that certain individuals will be able to deduct up to $25,000 of reported cash tips from their taxable income for the next 3 years, 2025, 2026, 2027, and then it'll be done. And this is only going to apply to tips that are properly reported on IRS tax forms. So that means the employee's W-2 or a contractor's 1099 or Form 4137. The tips have to be displayed there. There's a box specifically for tips that the amount is going to have to be in, and the IRS is going to take those tax forms and they're going to compare it against what individuals claim as deductions on their individual tax return to make sure they match out. So that's a really big, important compliance issue right there. The tips have to come from occupations that customarily and regularly accepted tips as of 12/31/2024. So you can't just decide now this year that you want to start taking tips and that this is going to apply to you. It's going to have to have been an occupation that customarily received tips as of the end of last year, 2024. One of the provisions from this bill passing is that the IRS is going to have to give a list of occupations by fall of this year, is what they said, that are going to be accepted for claiming these tip deductions. And two, they're going to have to modify tax forms because they're going to also have the occupation on these tax forms. So not only are you going to have to specify the tips earnings in a specific box on the tax form, but you're also going to have to put the occupation of the individual on the tax form as well too. And in the bill, it's written that the IRS has to provide these guidelines to individuals and businesses by fall of 2025, since they can claim the deduction at the end of 2025 for this year.
So that's it for the core policy. So let's move into income limitations. So deductions begin to phase out when the modified adjusted gross income exceeds $150,000 for single filers and $300,000 for joint filers.
Yep. And so what a phase out is the phase out rate for this policy specifically is $100 deduction for every $1,000 of adjusted income above the threshold. So if you are a single individual and you've made over $150,000, let's say you've made $160,000, right, for the year, you will receive a $100 reduction for every 1,000 above that 150,000. So for $10,000 of additional income, your deduction gets reduced by $1,000 essentially. Take, 10 rate times 100, and that lands you at the $1,000 deduction phase out. So it can get a little tricky. That's why you should have a tax professional, or you should speak with somebody who is well-versed in taxes to help you understand that. But essentially, if you are a single filer, or if you're married and you're filing a joint return, if you make less than $150,000 as a single filer, if you make less than $300,000 as a joint filer, then you should be able to take this $25,000 tip reduction if you are in a qualified trade position.
All right, so let's move into qualifying tips. So the no tax on tip deduction is not limited to just physical cash, like paper coins, tips. It covers voluntary tip payments that can meet the following conditions. So tips paid either with cash or digitally, like a credit card, debit card, Venmo, Square, etc. Shared tips, like if you see a little tip jar on the counter that's for everybody, those kinds of tips as well. Voluntarily given by the customer, which means it literally has to just be you chose to tip, voluntarily chosen. It's not subject to negotiation, not dictated by the employer, and it has to be customarily received in your line of work, like a server, a bartender, maybe when you go to get your hair done, you tip, stuff like that, that has always been a tipped type deal. As long as they've reported it properly and they meet those criteria, you can deduct it.
Yep. And so let's talk a little bit about what's not included, because that, I think, is like probably the more gray area, right? I think a lot of people think of tips and they just always assume that it's a voluntary tip, but that's not the case, right? Mandatory service charges at restaurants for large parties, those are not covered under this No Tax on Tips Act that's passed, right? Because you're saying 18% of gratuity is automatically added to the parties that are this size or larger. Those are wages, those aren't tips, and that's how the IRS is going to treat them, because you're not giving the customer to tip more or tip less based on their actual experience. It's no longer voluntary. You're telling them that because your party size is this big, we are going to charge you mandatory gratuity. So the IRS says you can't include those. Tips that are earned in excluded fields like law or accounting or finance or consulting are not included. And, there was some controversy about that for a while, that like maybe accountants should just start sending invoices out with tip fields so that our clients could pay us in tips so that we could, run $25,000 worth of tips through as non-taxable income. The IRS is not going to allow that. Our trades don't typically receive tips. We definitely did not typically receive tips as of 12/31/2024, and so it is not included. And then underreported or under the table tips are not going to be included because they're not reported. They're not going to be on the tax form, so you can't report those as a deduction. Because again, the IRS is going to be taking these W-2 forms and these 1099 forms, and they're going to be comparing it against what was actually deducted on the tax return. And if they don't match, that's going to be a red flag for them.
I think you said it perfectly. I think it gives an incentive for companies to not to do the 18% gratuity. This could be a really good thing for somebody who's waiting tables and they have a large party. Now they actually get bigger deduction at the end of the year for that big party.
Yeah, I think like employers could, this is like a low hanging fruit, is what I would call it, where employers can spend something that they don't really have to invest in, is something positive for their staff, right? So now let's talk about a couple of other key points. So one of them is that in order to take this deduction, you're going to have to report your social security number on your tax return in order to claim the deduction. Should be straightforward. If you are a citizen of the United States or if you have a work visa, you are issued a social security number, so you should be able to claim those tips in that deduction. Employers that are in beauty services now, so you think like hair, nails, aesthetics, and spas, they now qualify for the employer tip credit, which they did it before too. So that's a win for employers in the tipping industry. Another key point is that there's going to be new IRS reporting rules, and I talked about this a little bit before, but third-party organizations like Venmo and Square, where they issue like 1099 forms, they're going to have to start breaking out cash tips and the recipient's occupation into their own little boxes on these tax forms. So that means that our tax forms are going to have to go through an overhaul. And you think of all of the different third-party systems that allow you to e-file, they're all going to have to make sure that they have these updated forms too. You think about all the payroll processors like JustWorks and Gusto and ADP and Paychex and QuickBooks Payroll. They're all going to have to make sure that they get these new forms in compliance for the end of this year as well too. So it's kind of significant. Yes. And the IRS, like I said earlier too, they must publish a list of approved tip earning occupations by fall of 2025. So as soon as we learn what that is, we'll make sure that we blast that everywhere so everyone's very well aware of what occupations will be eligible to take this credit. And then IRS is going to have to adjust withholding processes for 2026 to reflect these deductions, right? Because everybody who claims these deductions are probably going to end up receiving tax refunds, and that can't be considered taxable income. So the IRS is just going to have to adjust those withholding processes for the following years.
There are some pros that have to do with this, the Tax on Tip Act. The tax relief for the low income and service industry workers is going to be pretty big. You only make $50,000 in a year and you get to deduct $25,000 worth of your tips. Like, that's a big deal. And that's going to really affect the servers, the bar staff, anybody who takes tips. Like, that's going to be big. It's definitely going to encourage accurate tip reporting, since only reported tips are deductible. Having been somebody who worked in restaurants, not everybody reports every tip that they make. So,
which are you're skimming Medicare and you're skimming Social Security by underreporting tips, because those tips never get reported anywhere. So the employer doesn't pay the 7.65% of the government FICA taxes, and the employee never pays the 7.65% of the Medicare and Social Security taxes. So food for thought.
the cool thing is it's expanding the tip credit eligibility to beauty and wellness, which is going to be really cool for these employers that own those types of companies. So I think there's a lot of positives that's going to go into this.
And it creates clear IRS categorization and tracking of tip income across multiple platforms, right? Where we've got the standardized reporting coming out for tax forms. We've got the occupations being added on to the tax forms. And you might be asking, like, why this matters. Before this, cash tips were notoriously hard to track, and workers often underreported them, as Alli mentioned, intentionally or not. We'll keep out of that, right? But employers and third-party platforms like Venmo and Square also often lump everything into one income bracket, which makes tip audits hard. And any business that operates and has payroll, they're open to a tip audit. So having these more standardized reporting and more standardized workflows is going to help alleviate the pain points during the payroll audit processes for all businesses. And with these new rules, the IRS is creating structure to identify and validate legitimate HIP income by job type, by payment method, and they can improve transparency and enforcement of payroll tax laws. The IRS is now going to have a cleaner, more standardized picture of who is receiving tips, how much in tips they're receiving from, and what kind of job those tips generally stem from. And this is across both payroll and the gig economy platforms.
So this also allows people who are taking the standard deduction and non-itemizers to claim the deduction still. So in most cases, tax deductions like mortgages, interest, medical expenses only benefit people who itemize deductions in Schedule A. Tip deduction, however, though, is structured outside Schedule A, meaning it works more like a above the line adjustment. So even if a worker just claims the standard deduction, which most low and middle class, income taxpayers do, they can still reduce their taxable income by up to $25,000 tips.
Yep. And why that matters is that many tipped workers don't itemize because they rent. They don't even own their home, right? Or they have relatively simple financial lives. And this clause ensures that the majority of workers who rely on tips can still access the full benefits without needing a complex tax filing setup because that's not necessary for their financial situation. You can still use this deduction even if you don't itemize, which means that more people get to benefit from it with simpler tax returns.
So there are some cons to it, obviously. The temporary deduction, it only applies for 3 years. So it's only going to apply for 2025, 2026, and 2027. So it's not truly permanent and we don't know what's going to happen afterwards. So they phase out to the middle to upper income filers. So, people that are making over $150,000 a year, it doesn't really, they lose eligibility. There will also be increased compliance and complexity for employers and platforms, reporting tips occupation. It'll open the doors for potential abuse and misclassification in income as tips to avoid taxes. And the IRS is going to really need to be strong on their enforcement of that because there's going to be a lot of people that are going to want to get in on that.
Yep. And I'd say it's not going to affect Social Security and Medicare taxes, at least not in a negative way, in my opinion. That's still owed on tip income regardless. And is it really going to affect Social Security and Medicare, which is also known as the FICA taxes that run through payroll? There's a shared 15.3% of payroll taxes that's split up between Social Security and Medicare, that the employee and the employer split 50-50 through payroll. So the employee pays 7.65% of their wages into Social Security and into Medicare, and then the employer matches. And these taxes are still going to be owed on the tip income regardless. There might even actually be a positive, I would say, from this con, right? In the sense that we might actually collect more FICA taxes for Social Security and Medicare because this might actually spearhead more accurate tip reporting. Those people who were either purposefully or non-purposefully underreporting their tip income before might be incentivized to start reporting it correctly. And when they report it correctly, then it finally flows through payroll and sees these FICA taxes that will go off to fund these government programs, right? So a con with a little bit of a positive is that, yes, you're still going to owe the FICA taxes for these earnings that you're going to be reporting as tips, but these programs might actually receive more funding because we have no idea what the true value of underreported tips is in this nation from the service industry, right? So another con is that, this could be perceived as favoritism towards industries while excluding others, consultants, freelancers. We don't get access to this tip credit. It's only for service industry employees that customarily receive tips. And no matter how you look at it, this is going to drive up the federal deficit, right? Because unless you're offsetting these tax cuts somewhere else, there's no built-in funding mechanism for this $25,000 tip credit that service industry employees can claim, right? So if we're not pulling that money from somewhere else to cover it, then that means, unfortunately, that the federal deficit and the federal debt will continue to increase, which also means that our inflation rates are going to increase in tandem. So there's lots to unpack there.
Like
Good
we
and
said, it's
bad.
not really the great, beautiful bill, is it?
But there are definitely quite a few different scenarios where this really could benefit someone, right? And I think in a couple episodes, Alli, right, we've got it planned where we're going to do like some examples of real life jobs and real life earnings and like real life scenarios to kind of show everybody what the potential impact for you as an individual might feel from being able to claim this credit for the next 3 years.
And that's a wrap on today's episode and our deep dive into the Big Beautiful Bill, Part 1, the No Tax on Tip Act. Whether you're cheering it on or you have questions about it, how this could impact your paycheck or your payroll, we want to hear from you. And if this episode got you thinking, drop a like, drop a comment, and don't forget to subscribe so you can never miss an update. And we'll be following this legislation closely, and we'd love to keep the conversation going with you. So thanks so much for tuning in, and we'll see you next Friday. Bye.